Hey guys, Credible Crypto here with a market review on Bitcoin. It has been a little bit of time since I made my last YouTube video, and frankly, the only reason I haven't updated you guys recently was because everything is pretty much going according to what my expectations were in the last video, so there really wasn't much to update. But we are reaching a pivotal point here in the short term. We've been consolidating in the same range for about 2 to 3 months now, and so I decided that it might be time to make a YouTube video to argue my case about why I think that this region is going to be essentially consolidation before the next leg higher rather than consolidation before a dump to the downside. So this is the chart that I showed you guys in my last video. The last time I made a video, we were sitting down here at around between $5,000 to $6,000, and I basically sketched this out as an expectation of where I think we were headed. At this point in time, many people said we're probably headed back down to sub 3.7K. I was of the opinion that we were going to get a rally, and ultimately this was going to push above the highs at 14K. So as you guys can see, we've been pretty much following that squiggly pretty well here. We've pushed up exactly to where I was expecting, about 10.5K, this region right here of resistance that we've rejected at twice now. I was expecting some consolidation there before ultimately breaking through and continuing up to clear the highs here at 14K. So right now, guys, if we go to the lower time frames here, this is what we're seeing, and I posted this chart on Twitter here, and there's lots of debate right now on Twitter about whether or not the current consolidation that we've been in since May, since the beginning of May essentially, is consolidation before a break to the upside or consolidation before a dump to the downside like we saw the prior two times this happened. If this is consolidation before a dump to the downside, then people would say that this is considered distribution. In other words, larger players that bought the lows at 3.7K are now selling their Bitcoin here within the 9 to 10K range in order to buy back again. Sorry guys, the recording app that I used just crashed on me, but let me pick right back up where I left off. Yeah, so I was saying that if we do break down from here, then that means that this period of consolidation was actually distribution, in which players that bought the lower levels down here were selling their Bitcoin here in order to buy back again lower, right? So they're selling, meaning distributing their Bitcoin that they bought from the low 3Ks up here at 10K in order to send price back down and reload at a lower level, a level that many are targeting right now is around mid 7Ks, or sorry, I should say 7, right here around 7 to 7.1K is the area that many people are looking for. If this is reaccumulation, it indicates that big players have now essentially distributed here, and after buying 3.7K and testing this area for the third time, they're now expecting a break to the upside. So rather than selling their Bitcoin here, they're actually buying up as much as they can in anticipation of a large move to the upside. Now, if we go back to my other chart, essentially what this means is that they're buying up their Bitcoin because they know that a big move is coming, as I'm expecting, to the upside, essentially above 14,000, and this may be the last chance that they get to accumulate Bitcoin at sub 10K levels, and therefore they are stalling Bitcoin here. They're keeping Bitcoin floating in this region, while idea being retail is selling their Bitcoin thinking we're going to dump in order to actually buy up more Bitcoin before a rip to the upside. Now, one thing is for certain, whether or not this is distribution or reaccumulation, I think we can all kind of agree that if and when we do break above this major supply zone, we are likely to see a pretty aggressive move to the upside. This level has been tested 3 times now. It's rejected the first 2 times. We're testing it for the 3rd time. Eventually, this level is going to give way. And when this level does give way, because it was acting as resistance for such a long period of time, we can expect buyers to start rushing in once we break above it. Therefore, if we do happen to break above this level, it's likely that we see a very aggressive move to the upside, anywhere from $1,000 to $2,000 to $3,000 move. And so in that case, it would make sense for larger players to want to accumulate below these levels, because they may know that if we do break above here, we could get a very aggressive move to the upside. Again, a move to 14,000 from current levels is a massive move. That is a 50% move, and so it makes sense to accumulate at these levels if we are going to break through here, okay? So the big debate right now is this accumulation, is this distribution? Personally, I believe that this is reaccumulation, not distribution. Many seem to believe that this is actually distribution, but I've outlined my arguments here on this chart. This is the 3rd time we're testing the supply zone. Supply is finite. There's only a limited amount of sellers at this level, and once they have sold, then they're out of the picture, and if buying pressure continues to press up against this level, eventually it will give way and a break to the upside will occur. Each test of the supply level makes it weaker. We know that it's just a matter of time before it's broken. When we do break, the move can be explosive. And we've been consolidating under this region for over a month. The prior 2 times that we rejected from it, it was a dump after 2 weeks, a dump after 3 weeks, and it's been 1, 2, 3, 4, 5, 6, 7, 8 weeks now, and we haven't yet dumped. So this tells me that sellers are essentially losing losing pressure here and buyers are picking up the slack. Now, arguments can be made that because the drops from these levels have been consecutively larger, that sellers are not being exhausted here, but I would say that this particular event was a reaction due to COVID and due to the markets crashing, essentially a black swan event that sent price down the slide. Would not have expected the drop to be this significant had those events not occurred. And I've talked about this in my prior videos. So although the drop getting bigger each time we test this region is not ideal, I still think overall it makes more sense that this is actually reaccumulation rather than distribution. So now let's talk about which levels I'm looking at above and below us to further confirm or deny this theory. So this is a chart in the lower time frame, and this is what I've been tracking for a while now, guys. Essentially, I think that we are in one large corrective structure here that's going to break to the upside. I think that this was a flat correction. As you guys can see, an expanded flat correction for the W. This looks like a zigzag for the X, and I think we're getting another zigzag for the Y. I've been targeting the mid 8K levels at 8.5 to 8.6K. I think that's where we bounce and then continue to the upside. Let's see here. Something like that, essentially. This is the idea that we are seeing reaccumulation here. So essentially, this is one area where we're ranging between, and I expect it to culminate in a break to the upside after this corrective structure completes. Now, we have a lot of individuals that do think this is distribution, all right? And the only thing that makes sense to me is if this really was distribution, and we've been consolidating in this region for 3 months, just in the same way that I'd expect the breakout to be explosive, I'd expect the breakdown to be explosive as well. These individuals that are considering this to be distribution, many of them are targeting the 7.1K region, and it makes sense from this perspective in that it is this key area of consolidation before our break to the upside, before our acceleration of the upside. So it makes sense to target that region, which is essentially this orange yellow that I've marked out here, which is between 6.8 to 7K. However, in my opinion, the more important region, I think, is this 7.8 to 8K level rather than 7.1K. I think if we get down to 7.1K, I don't think we stop there. I think we dump even harder. Again, I don't think that's going to happen. I personally think we're going to break to the upside. But I think that the more significant level on the downside that we should be watching is the 7.8 to 8.1K level. This is a daily level, daily area of demand. It's the same level where we saw our capitulation drop originate, and it's the same level where we saw a $1,000 candle originate. We haven't yet tested that level. I've marked off this general area, but if we want to make it even more concise, we can mark off this little order block right here, which is the level right before we got our $1,000 move to the upside. So this level has not been tested, and it lies right between 7.6 to 7.8K. And I think ignoring this level and assuming that we're going to drop straight to 7.1K is what's going to trip some people up here. Now, even if this is reaccumulation, an argument can be made that our range is essentially this region right here, this high, and this low, right, denoted by the swing highs and the swing lows here. So even if we do break down from this region and end up tapping 7.6 to 7.8K, I still wouldn't consider that distribution. I don't expect that a 3-month range with a range from 10,000 down to 8,000, a $2,000 range, is considered broken if we tap and clear the lows here at 8,000. That's just a deviation from the range in my opinion. So really what I'm looking for, guys, here is even if we do go ahead and break down from 8,600, which I'm expecting to hold, even if we do tap 8,000, I expect it to be a quick shakeout here and then continuation to the upside, which would tell me that this is still reaccumulation. That was just a deviation and clear these lows, and then we continue to the upside. Any break from a range that takes this long to form, that has a $2,000 width, I would expect a break in that range, if it's a real break, to expand lower than the lows of the range, obviously, right? If we just clear these lows and tap here and come back up, that's not distribution. Distribution occurs when we break these lows and we absolutely dump a minimum to 7.1K. But honestly, guys, like I said, if we lose this region here, I think we're going a lot lower than 7.1K. I would expect to see 6 or 5Ks again. Again, I don't think that's likely, but what I'm trying to get at here is I think that this level is being ignored, and it shouldn't be. I think this level is very significant. I think we can come down here, tap this level, and still be okay, even if 8.6K is lost, even though I'd ideally like us to bounce off of this region here because it makes more sense with my count. But either way, this level is significant in my opinion, and if this level is lost, I get more concerned, not just about 7.1K, but numbers lower than that, which again, I don't think is going to happen. So let's talk about my arguments here a little bit more that I just noticed regarding why I think this is reaccumulation, besides the points that I've already made here. One of my followers asked me if the volume profile matches with the idea that this is reaccumulation. And it looks to me like it does, just to be very frank here. I've charted this out here, and what I'm basically trying to draw attention to here is that every volume spike that we've seen in this range that we're seeing, okay? Again, let me map out that range. This is the high, this is the low. Every volume spike that we've seen in this range has occurred on the downside, right? We're seeing a volume spike here, and that is when we saw our selling pressure climax right here. That's the biggest volume spike in the range. Buyer stepped in, essentially, is what it tells us. We saw another volume spike here at the high of the range. We saw another volume spike here. This occurred sort of mid-range toward the lower quarter of the range. Another spike here. This occurred again on this drop here. Another spike here. This occurred on this drop. Another spike here. This occurred on this drop. Now the key here, guys, is that even if a candle is red or green, it really doesn't matter because the candle is going to take the color of whatever direction this closes, right? But what we want to notice is where are the wicks forming? Where is the most trading being done? Where are buyers and sellers engaging the most? And that typically is going to be occurring where we see these wicks. What these wicks indicate is that as price was falling here, price fell all the way down to this level and it was bought all the way back up to this level. So the most trading occurred within this region, right? And that's likely where the biggest amount of volume in this volume candle occurred. So even though the volume candle is red and some consider that selling pressure, the reality of it is that most of that pressure probably came in at the lows here, which tells us that buyers were aggressively stepping in as we approach the range lows. The same occurs for all these other spikes. This candle shows us that there was aggressive selling here with the wick up to the upside, in which case whoever is accumulating this range wasn't ready to let us take off yet. They wanted to accumulate more, in my opinion. This spike again shows that sellers stepped in towards the low of the range, not up here where the selling was actually occurring, right? We had lower volume at these regions at the tops of these candles. We did have some wicks here, but nothing significant. We had wicks on the downside as well. But actually, the larger wicks are going to be on the lower end where buyers are stepping in and aggressive traders were entering, right? Again, same thing here. We had a nice aggressive move to the upside, but check out the volume. It's half of the next move. And the next move has absolutely no wick to the upside, right? So price probably just sold down easily, but when it reached this region, that's when buyers started stepping in and most of this volume probably came in. Same thing here. We had buyers stepping in towards the lower end of the candle. Same thing here. Buyers stepping in again towards the lower end of the candle. And if we want, I can't actually go to the 4-hourly chart on this chart because it's the Brave New Coin Index, so it won't let me. But let's go ahead and take a look at this chart on the 4-hourly and see if we can further isolate where these wicks and where the buy volume is coming from. So this is the 4-hourly, guys. And let's take a look again at our charts and our volume. And let's see if we can identify where these volume spikes are really originating, right? So as we can see here, this was the high, this was the low of our range where we had a giant wick on this particular 4-hourly candle. And check it out. That's exactly where the volume was coming in on this particular 4-hourly candle. So knowing this, we can make the argument that volume was not coming in above here. Volume was coming in towards the lower end of this range. And if I go down to a lower time frame, you'll probably see that the most volume was occurring within whatever hourly 15-minute candle that occurred here. Same thing here. We have a nice spike in volume right here. Again, it's on this low candle with the wick. Right over here, we have spikes in volume. Again, these low 4-hourly candles right here. Again, spikes in volume. Again, a nice wick to the downside on this 4-hourly candle here. Again, a spike in volume. Again, a nice wick. Again, a spike in volume. Again, a nice wick. So we are really able to see that the aggressive buyers and the aggressors in this range are the guys stepping into lower range, not the sellers that are selling above. These guys are not selling aggressively. These guys are very clearly buying aggressively based on these volume profiles here. So guys, that is pretty much what I wanted to cover in this video. My argument for why I think that we are seeing reaccumulation and not actually seeing distribution in this particular range. I do think that we're going to break to the upside. One more thing that I want to bring to your attention, guys. Hidden bullish divergences can be seen across our lows right now. This is our daily chart. We can see here we have price making a higher low from this peak to this peak, or from this trough to this trough. Price making again a higher low from this trough to this trough. And we can see on RSI price making lower lows again as well. So this indicates that we are seeing sell pressure dry up. It's right in the range of 40 to 60, which is where I like to see my hidden bullish divergences. This is a bullish factor. If we go to the 3-day, we can also see the exact same thing. We can see these hidden bullish divergences occurring here. Price again from this low to this low, and from this low to this low. Price making higher lows. RSI on the other hand making lower highs. Let me change this. There you go. Or sorry, making lower lows. So higher lows on price, lower lows on RSI between 40 to 60. Those are clear hidden bullish divergences. And the hidden bullish divergences have been panning out very well. We saw one right over here on the daily, this one right here, which I had actually mapped out. A lot of people were bearish on this drop. I was looking for a pop up. We got the pop up and we had the exact same hidden bullish divergence over there as well. You can see price making a higher low here, and RSI making a lower low, and I pointed that out on Twitter that we're seeing a hidden bullish divergence, and we saw our pop above the highs here at 10K. So that's another argument for the bulls here. Overall, guys, that's all I want to make this video update for. I'm going to try and make quicker videos, shorter videos that get really straight to the point from here on out. I think you guys enjoy the shorter videos a little bit more than the longer ones, so I'll be trying to do that from now on. As always, if you guys have any questions, feel free to reach out. I hope you guys enjoyed the video. All right, thanks, guys.